What is the secret to becoming a crypto millionaire? In the last few years, we've been seeing many people becoming millionaires by investing in crypto, and they get started with not so high investments. Some people even invested more than $1,000 to build wealth. But what is the secret behind it? Well, beyond the fact that the crypto market is one of the most profitable markets in the global economy, these people also developed a smart investment strategy. Whether focused on the short and long term, smart investors have a purpose when they put their money into crypto assets. That's why we've brought you 4 strategies that are widely used to have a profitable portfolio. Of course, we brought the easiest and most popular ones because it is a beginner's guide, but it doesn't mean they aren't used by experienced investors as well. Actually, once you know these strategies, it is very difficult to give them up. So let's talk about them. Number 1. Investing in coins before they explode. One of the most usual things that experienced investors do is to put their money on promising crypto projects before they explode. So they pick the right assets, hold them, and then just wait for price appreciation over time. To find those coins before they explode, first you need to organize your portfolio. Do not start investing in every coin you see out there. So make a list with at least 10 coins or tokens that you think it has potential. Ideally, try to choose coins you've never heard before, because if everyone is talking about a coin, it has probably appreciated to levels you may not profit as much as you could. If you stick to cryptocurrencies that crypto influencers haven't covered yet, that means these cryptos are still not on most people's radar. But where could you find this kind of underground cryptocurrency? Well, in the second, third, or even fourth page of CoinMarketCap. However, remember that the further down the list you go, the higher the risk. Next, you need to go through every crypto in this range one by one and make an initial analysis. You should check things like price performance or price history, the project behind it, which real problem these coins intend to solve, and their future perspective. Always wondering, a year from now, could these coins remain a good investment? You can also check crypto-specific news sites such as Cointelegraph, Decrypt, and CoinDesk. So the next step is to allocate a small percentage of your portfolio in these selected coins. Remember to never go all in on a crypto you think is going to pump. There is no guarantee that the pump will play out exactly as you predicted. In a worst-case scenario, your investment could go to zero. So be wise and put down only what you're willing to lose. Not only will this help minimize your losses, but it will also make cashing out easier if or when the gains start to come in. That's because it's really hard to take profits if you have a huge allocation and prices are going parabolic. Reducing your exposure will make it easier to maintain a risk-off profit-taking strategy. Number 2. Buying altcoins with prices floors. This is similar to buying the dip, but with a more specific context. Since coins are volatile, they have potential for deeper dips, but it also enables a higher upside as well, and slightly less risk in certain situations. And when these coins are nearing the price floor, you have a good chance to invest in it. Maybe you're wondering, alright, and when can I know what the price floor is? The answer is you can never know exactly. However, you can get the sense of a price floor either by following a crypto for a while or checking where the price action goes at the charts. You also need to pay attention to support levels for the price. This is not an exact science, but it gives you at least a starting point. This strategy works to make you able to buy promising projects at a really deep price, without it having much downside potential. At this point, we recommend you to invest in projects that are actually solving real-world issues and and that have money behind them, meaning if they solve those problems, they're going to make a ton of money in returns over your investment. Some good examples are Algorand, Cardano, Avalanche, Polygon, Phantom, Harmony, Terra, and much more. And we strongly recommend you to do your research during this evergreen crisis. Some of these low prices cannot repeat again, so you can buy it in the red days over the course of weeks, even months. If you have the conviction that some project has a huge potential and you understand the price action, then you can sit and wait for future profits. Number 3. Staking crypto. Earning passive income is always a good alternative to build wealth with cryptocurrencies, and we could give you a lot of strategies and tips to earn passive income, but we already did it in our last video, so we're going to focus on what we think is the best way to earn passive income in this market: staking crypto. Staking is a unique feature of some cryptocurrency blockchains. It is important to mention that staking is completely different than lending crypto. Staking is a way to earn rewards for holding certain cryptocurrencies, specifically those that work by a proof-of-stake model. Cryptocurrencies like Bitcoin operate on a proof-of-work model to verify transactions. To do this model involves powerful computers solving complex mathematical equations. In such an ecosystem, miners do that. They compete against one another to be the first to solve problems, consuming a tremendous amount of electricity in the process. That's why those who are able to solve the puzzles are rewarded with tokens of these cryptocurrencies. In other words, if you are a miner working in the proof-of-work model on Bitcoin's blockchain, then you will be rewarded with Bitcoins in exchange for your efforts. In a proof-of-stake system like those used by Cardano and Ethereum 2.0, things work more like a lottery. Let's use ADA, the native token of Cardano, as an example. In this lottery, each ADA token is like a ticket, and everyone who participates can win the lottery. But, of course, those with more ADA have more tickets, and thus a better chance to win the lottery and get a reward. This is the process by which validators are selected to create a new block and process transactions. If you decide to stake your ADA for a set period of time, you will periodically earn a return on your investment. And that's basically what happens with any other proof-of-stake system. So to do that, all you need to do is find a staking pool for the crypto you want to stake and invest. Number 4. Holding cryptos that worth it. If you're confident with your investments, meaning you've actually done the due diligence yourself and your investment plan is long-term, then there isn't a reason to sell on dip. Holding cryptos from projects you believe in is so obvious that many just ignore it on the first red day in the market. Some of them get desperate with the possibility of losing all their money, even when the circumstances show the opposite. Then the first thing they tend to do is to sell every asset they have. But the truth is, you only lose money when you sell. There is nothing wrong or reckless to expect price appreciation over the years, even when the market isn't going well. Try to be rational and less emotional when things don't go as you planned, because bad days and low prices aren't your fault. Therefore, just remember to observe the obvious things which nobody else is paying attention to. We hope these tips can help you by improving your investment strategies to build wealth and maybe become a crypto millionaire someday. Remember, it's never too late to get started. If you enjoyed this video, please hit the like button to help us reach more people on YouTube. If you're considering investing in cryptocurrencies too, remember to check our bonuses in the description to help with lower fees using our links. Moreover, subscribe to our channel and turn on notifications so you don't miss a thing. See you soon, guys!